Bismillahirrahmanirrahim. In the previous class, we discussed about lease, that what is lease. Then we discussed about characteristics of lease, legal aspects of lease, the duties of lessor and the duty of lessee. Then we discussed about types of lease, in which we discussed about operating lease. Then we discussed about the accounting treatment, purchase option, lease term, expenses borne, running cost, and then we discussed about an example of lease. Operating lease. Yes. So today we are going to start capital lease. We also call it financial lease. In a financial lease, also known as capital lease, the risks and rewards related to ownership of asset leased are transferred to the lessee. Generally, financial or capital lease cannot be cancelled. Now, in this type of lease, all the risks and rewards related to the ownership of assets, it will be transferred to the lessee. This is a car. The example of capital lease is car financing, home financing, and different others. These are prominent examples of the capital or financial lease. Now, in car financing, I told you that suppose you want to purchase a car. But you don't have money in your pocket. This is you. Now you want to purchase this car. So you are contacting a bank. That I want to purchase a car. The price of this car is, you selected a car. Suppose this is the car. Its selling price is $15,000. Now what will bank do? Bank will make payment of 15,000 to the seller. And now you will make payments to the bank in installments. Suppose the monthly installment, it is $300. So in 3 years, in 4 years, you will complete this payment. Whatever the amount is, you will make payments until this $15,000 money is paid plus interest on this money. Suppose 2,000 is interest. So you will make 15 plus 2,000, 17,000 payment to the bank. Now in this case, the ownership of this car, it will be with bank. Ownership will be with bank, means the documents of the car. Bank will keep these documents with him. Now, documents are with the bank, you are making payment. At the end of the payment, when the payments are complete, $17,000, bank will give these documents to the owner. Now, the ownership of this asset, it is with bank. He can use this car, or if it is a house, he can live in this house. Just only the documents of this car, it will be with the bank. When you will complete the payments, bank at the end of the last installment will give you the ownership documents. So this is capital lease. Now this lease cannot be cancelled. Why? Suppose you made payment for 1 year and then you're going to bank that I want to cancel, so it is not possible. Neither the lessor, neither the lessee can cancel this contract. Both parties, they can't cancel this contract, and at the end of the contract, ownership of this asset will also be transferred to the lessee. Now here in this case, bank is lessor and you are lessee. So at the end of the contract, the ownership is transferred to the lessee. In the first one, operating lease, ownership is not transferred. At the end of contract, you will return, the lessee will return the asset to the lessor. So this is the difference between these two. So in financial lease, the risks and rewards, all the risks, if during this payment time, suppose 5 years is the payment time, and the customer make an accident, okay, an accident happens, so bank is not concerned with this risk, that if there is accident, so what will happen, bank is not concerned, you will be concerned, the lessee will be concerned. And the rewards, if he is using it as a taxi and monthly he is generating 50,000 Afghanis, bank is not concerned with this 50,000 Afghanis. All the risks and all the rewards, returns, it will be related to the lessee. Risks and rewards related to the ownership of assets is transferred to the lessee. Generally, financial or capital lease cannot be cancelled. You cannot cancel it. Ownership, so just like I told you, ownership at the end of the contract will be transferred to the lessee. Ownership transfer options at the end of the lease period is there with the lessee. Ownership will be transferred to the lessee. Title might or might not be transferred eventually. Just like I told you that bank will keep the documents of the car. There is possibility. He can keep it with himself, he can give it to you. If he is trusting you, he will give it to you. If he is not trusting you, he will not give the title of the car to you, or the title of the asset to you. Ranges from 3 to 50 years and even more than that. The range of this contract, it is from 3 years to 50 years, or it can be more than that, depending on the asset or the value of asset. Accounting treatment. Financial lease is treated like loan generally. Here, the asset ownership is considered of the lessee, and so asset appears on the balance sheet. Now here is a problem. The problem is that this is leaser or lessor, and this is lessee. for him, for lessee, when this is the start of the contract, this amount of $17,000, it will be a loan. 4 years, so it will be a long-term bank loan. But when after 1 year, suppose he made payment of $3,600 monthly, $300, so yearly it will become $3,600. This amount will become an asset, that amount which is paid. And that amount which is not paid, that is 13,400. This will be a loan. So that amount which is paid, it will be an asset for the lessee. And that amount which is not paid, which is still loan, it will be a liability, long-term liability. So this is the accounting treatment, because the amount that he paid, so this asset up to this amount is his asset, and that amount which is not paid, it will be his liability. The asset ownership is considered of the lessee, and so asset appears on the balance sheet. That amount which is paid, that will appear as an asset in the balance sheet, and that amount which is not paid, it will be just like a liability. Purchase option. Financial lease allows the lessee to have a purchase option at less than the fair market value of the asset. Now lessee, if he want to make lump sum payment during these 5 years, he can come and without paying the interest, he can claim the asset. Lease term is generally more than or equal to estimated economic life of the asset lease. What will be the time period of lease? So it will be more than or equal to the estimated economic life of the lease asset. Means you will make payment within the estimated life of the asset or more than that of the asset. Expenses borne in financial lease, lessee bears insurance, maintenance and taxes. Now if lessee is purchasing this asset, this car, so this car, the repair of the car, the maintenance of the car, it belongs to lessee. Lessee will bear this. In the previous one, lessor was responsible for the maintenance, but here now the lessee, in financial lease, lessee will be responsible because he is using the car. So when he is using the car, so he will bear all the expenses. Then the running cost in financial lease, running cost and administration expenses are higher. Now this contract between bank and the customer, it will there will be some costs related to this, and these costs are usually higher costs. Here is an example. The lessee, customer or borrower will select an asset. He will select any asset that he wants to purchase. Equipment, vehicle, software, whatever that is. The lessor, finance company, that is bank, will purchase that asset. He will purchase that asset for the lessee, for you. The lessee will have use of that asset during the lease. During the lease period, 4 years, 5 years, in the time that lessee will make payments, he can use the assets. The lessee will pay a series of rentals or installments for the use of that asset. Just like I told you, 300 will be the monthly installment. So he will make payment in installments. The lessor will recover a large part or all of the cost of the asset plus earn interest. So lessor, just like I told you, that 15,000 is the cost plus 2,000 interest. He will receive 15,000 cost plus 2,000 interest. So plus an interest from the rentals paid by the lessee. The lessee has the option to acquire ownership of the asset. At the end of the lease, the ownership of the asset will be transferred to the lessee. Lessee has the option to acquire ownership, means at the end of the contract, ownership of the asset will be transferred to the lessee. There are different other types of lease. The first one, it is net lease. What is net lease? A type of lease in which a lessee will bear cost of maintenance and repair and will insure the leased assets through insurance company. Just like I told you in operating lease. Suppose this is asset. This asset belongs to party A. And this party A give permission to B, party B, to use this asset. B can use this asset. And B will pay monthly $2,000 for the use of this asset. Now, in operating lease, the maintenance and repair expenses, it belongs to the lessor. This lessee, he will just use it and he will pay the monthly rental payments. He is not concerned with the repair and with insurance. Repair, insurance. Who is responsible? The leaser is responsible. But in net lease, the lessor, he is telling the lessee that you will be responsible for repair, you will be responsible for insurance. You will insure it, and you will, if there is something happen, you will repair the asset. So this type of lease in which lessee will bear cost of maintenance and repair and will insure lease asset through insurance company. I told you that in operating lease, lessor is responsible, but in net lease, lessee is responsible for repair and insurance. Then there is another type of lease that is called full service lease, a type of lease in which lessor will bear cost of maintenance and repair and will insure leased assets through insurance company. Here, lessor is responsible. Lessee is not responsible. Lessor is responsible. That was for net lease, the previous one, sorry. And this in full service lease, the lessor, the party who is the owner, he will be responsible for repair and maintenance and the insurance. There is another type of lease that is called sale and lease back. Take an example so you will understand it easily. Suppose this is a machine. This machine belongs to a company and company name is A. What is company doing? Company wants to sell this asset. They wants to sell, but they still need to use this asset. They want to use this asset after selling. So what are they doing? They are selling this asset to B for suppose $2 million. They sold it and then they make a deal with B that we will use this machine and we will make you monthly $2,000 payment for the use. So see, they sell the asset to B and then from B on lease they took this asset to use it in their factory. So this is called sale and lease back. Selling an asset to another party and then from that party taking it on lease. They sold it to party B for 2 million and then acquire the use of asset for $2,000 monthly payment. This type of lease is called sale and lease back. Selling an asset and then leasing it. Take another example. Suppose you have a house. Suppose this is your house. You are A. Now you need money. You want to start a business. So you are selling your house for $3 million to B. But you also want to live in this house because you don't have any other house. So what are you doing? Selling it to B for $3 million and then taking it on lease from B that I will live in this house and I will make you payment $2,000 monthly payment. So selling an asset and then taking it back on lease. So selling the asset and then taking it back on lease. This is called sale and lease back. Sale and lease back occurs when a company sells an asset it already owns. They own this asset and now they want to sell it to another firm and immediately leases it from them and then taking it on lease from them. Two sets of cash flows occur. There will be two sets of cash flows. The lessee receives cash today from the sale, just like I told you. When you will sell the house, so you will receive $3 million. A will receive $3 million. And then the second one, the lessee agrees to make periodic lease. And then you are now lessee because you are taking it on lease from B. And now you will make monthly payments. So $2,000, you will make payment of $2,000, thereby retaining the use of the asset. And why you are doing this? To retain the use of asset. You want to use this asset again. Then there is a fourth type of lease that is called leverage. In leverage lease, the type of lease in which three parties are involved, the lessee, the lessor, and lenders. Now there are three parties involved. One is party A, he is the lessee. Here is party B, he is the lessor. And here is party C, he is the lender. Now suppose party A wants to purchase an asset, but they can't make lump sum payment. He contacts party B. This party B is a middleman. This is lessee. This is lessor or leaser, whatever you call it. And this is the lender. B don't have money. So he is contacting a third party. This third party is the lender, a financial institution. Now in this case, what will happen? Lender will give money to B. B will purchase an asset for A. Now here, three parties are involved: A, B, and this party C. Now in this type of lease, if this lessee is not making monthly installments, he will not be involved. He will not be responsible. Who will be responsible? Whatever. He's not concerned. He is just a middleman. He is making deal between this party and this party. He is working as a middleman between these two parties. The type of lease in which three parties are involved: the lessee, the lessor, and lenders. A lease agreement that is partially financed by lessor through a third party, that is financial institution. In a leverage lease, the lending company holds the title to the leased asset, while the lessor creates the agreement with the lessee and collects the payments. Now in this case, the title of the asset, the ownership of the asset, it will be with the lender until A makes complete payments. This B, who is a leaser, he is just involved for agreement. He is not concerned about anything else. He will just, A will make payment, monthly payment to B, and B will make payment to the lender. Lessor creates the agreement with the lessee and collects the payments. Monthly payments he will collect, and he will pass it, he will give it to the lender. The payments are then passed on to the lender, just like I told you. This means that lessor is not obligated to the lender in case of default by the lessee. If there is default from the lessee, lessor will not be concerned. He will not be responsible for the default of A. You can't take payments. Lender can't blame the leaser for the default of the lessee. So this type of lease in which three parties are involved, it is called leverage lease. So we discussed about financial lease or capital lease. Then after that we discussed about the accounting treatment, the purchase option, the lease term, expenses borne, running cost, and different other things. Then we discussed about an example. Then we discussed about other types of lease. 4 other types of lease. One was net lease, one was full service lease, one was sale and lease back, and then there was the last one, that is leverage lease. I think for today it is enough. Inshallah, in the next class then we will talk about another chapter that is regarding the dividends and dividend policy. That is part of the dividend chapter, but I forgot. So inshallah, here in the next class then we will discuss about this. Assalamu alaikum.